Hey everybody, welcome back to the Capital Pulse. Today we're going to be dealing with the Kevin Warsh regime and a new blueprint for capital and the changes of the Fed. So, this is Jeff Hogan. I'm a commercial capital advisor and this is the Capital Pulse. And so, want to talk with you about the fact that you've been really working hard to build your business, but right now you're facing a very common dilemma that we all are: uncertainty. So, between maturing loans and the shifting Federal Reserves, the cost of capital is the biggest question for your balance sheet as well as the Federal Reserve. So, today on the Capital Pulse, we'll break down the confirmation hearings of Kevin Walsh, the man that's likely to lead the Fed. Matter of fact, he's in front of the Senate right now. He's promising a regime change that would completely redefine how you finance your next project and what it would, the impact that it would have on the economy and how the direction of the Fed and in the direction they want to go. So, first, Walsh wants the Fed to stop talking so much. He believes that forward guidance, where the Fed tries to predict the future and or radiate it to the market so that it gets absorbed, actually is distorting the market, not impact, and it's impacting it way too much. So he wants the Fed to stay in its lane and act on the data, not on what they're forecasting. Second, he's a hawk on the balance sheet. He wants to shrink the Fed's massive holdings aggressively. Why? Because he believes the Fed shouldn't be a Treasury ATM. He wants to move away from financial engineering and back to a lean core mandate of price stability. He believes that there are actually a couple of tools that they have, one of which is Fed rates, and the other tool that he believes is the balance sheet of the Fed and how to use both of them and how they impact the economy. So here it is, getting really interesting for you and your business as a business owner. Walsh isn't just a traditional hawk. He's also an AI optimist. And we'll be dealing with a lot of AI in the future issues and on future shows. Walsh's argument is his testimony this week is that we are entering a massive AI driven productivity wave. He believes that this is a disinflationary force. He believes businesses like yours can do significantly more with through a, through a lot of technology and through use of AI. Growth that won't necessarily trigger inflation because it'll be able to reduce your cost of productions. So, what's the big pivot? Because of this productivity, Walsh has surprised everyone by arguing that the Fed's fund rate should actually be, you guessed it, lower. He wants to reduce the cost of capital to fuel this innovation, shifting the focus from supporting debt to accelerating growth. For you, this could mean a more favorable rate environment for construction, for expansion of your business, and or on taking on new projects or buying new equipment. So on the back half of 2026, you could be looking at much lower rates for your projects. So what is the guidance that you should be looking for? Well, what's Redwood's take on this? A Walsh-led Fed means less noise and potentially lower rates, providing the productivity data holds up. But don't wait for the perfect rate to start your project. At Redwood, we have a success formula for funding that takes you through the six steps to getting funded on any kind of a deal and to structuring the deal with the right capital stack. Because sometimes structuring the right capital stack for your project is more important than just being able to get a loan. So, if you have a loan maturing or a project that you're wanting, or you're looking to purchase new equipment, let's talk. My goal is to protect your cash flow while the experts in DC figure out the rest. Anyways, so make sure you subscribe, make a comment below, and for your on these 5-minute deep dives, hit the like button and let's keep the capital moving. I'm Jeff Hogan, and this is the Capital Pulse. I'll see you tomorrow.